Welcome to Wednesday's Market SITREP here at Top Gun Options. Matthew Buckley, call sign Wiz, the primary and weekly options model portfolio manager here at TGO, and got a little bit of a quote relief rally and then a little bit of a temper tantrum based on the Fed minutes that were released this afternoon. It showed that the Fed kind of well, the written minutes confirm the Fed's actions after the meeting. The Bernac said, fired a shot across the bow of USS Market, and then USS Market freaked the hell out, went through a temper tantrum along with world markets, and then his lieutenants ran out literally to any microphone they could find and said, everybody relax, he's just kidding, we're going to be hanging out for a while here. So, as you can see, the market literally, just take a look at a chart of what happened today so far. And you can see where you can see exactly to the second where the Fed minutes came out, and the market reacted and said, "Well, good. The Fed should be creeped out about easing at this point." And then read the rest of the minutes and said, "Well, that's not good because they still want to ease." So, as we've talked about, and I told all my traders at Top Gun Options, there's always a but or a comma, right? The Fed, we at the Fed believe X, Y, and Z, blah blah blah, quack quack quack. However, comma, and then they talk out of the other side of the mouth. So just know that, with the jobs report that we've discussed on Friday, which just did not light the world on fire, with employers sending more and more full-time employees to part-time because of Obamacare, the Fed's not going anywhere anytime soon. They saw the temper tantrum that the markets had, and it's just it just wasn't pleasant. So the biggest alligator, the closest alligator to our boat right now are earnings, and we saw Alcoa's beat, quote unquote, on Monday. Really don't care about that. I'm going to be watching for Yum Brands, obviously huge fast food operator and restaurateur around the world. And more importantly, on Friday, JP Morgan and Wells Fargo. So starting to look at the financials. So what's really going to drive this market over the next month or so until we get the next Fed meeting? It always seems like the next Fed meeting is the most important Fed meeting ever. Well, guess what? The next one is probably going to be the most important one ever, because we are going to really figure out when, instead of shooting across the bow, he's going to put a shot right into the side of USS Market, and we're going to freak the hell out. Because, folks, obviously interest rates can't stay this low forever. Interest rates are going to go up. It's not a matter of if, but when. And the Fed's got to unwind that over $3 trillion and most likely $4 trillion balance sheet that it has, unless they're going to go Russia and just wake up one day and say, you know what, there is no balance sheet at zero. Or they just sit on it forever, which sounds like it's the new America here. Just keep kicking the can down the road as far as you can. Good stuff going on in our weekly options model portfolio. Have two positions on for the week. A Goog Bull put spread that's up about 65% in 2.5 days, or $1,100. We have a bunch of Netflix trades on. Netflix had a nice little pop yesterday on on kind of old news that a deal with CNBC, and I sold into that pop this morning. I sold the 250, 255 bear call spread that expires on Friday, and it's already up $640 in a couple hours, or a 45% gain in just a couple hours. So I strongly, and the overall portfolio is up $2,800 today. So having a great time in our weekly options model portfolio. Strongly recommend you take a test flight. You can click on the link in this email, or you can go to the Top Gun Options homepage there, topgunoptions.com. Hover over services, and you can go down. Second drop down there is weekly options. Or if you're an old man like me, you go to topgunoptions.com/weekly-options, and you can give it a test flight. Okay, so strap in, folks, for earnings. As I talked about in my primary live trade brief the other day, this is the highest negative pre-announcements that we've seen since the first quarter of 2001. The highest ratio of negative to positive pre-announcement earnings. So it's not going to be a pretty earnings season, but as you know, kind of like with Alcoa beating at 7 cents, the forecast was 6 and they beat at 7. Their initial earnings per share forecast, folks, a while ago was 70 cents, and they knew they weren't going to hit the ball over the net. So what did they do? Not only did they lower the net, they pulled the damn net off the court and essentially just rolled the ball, down the court. Embarrassing, but that's the Wall Street game. right? Is sandbag, under promise, and over deliver, right? So that's what we're going to see in this earnings season. So stand by for more volatility. But if you don't know what the hell you're doing, get on board Top Gun Options in one of our live trading services or one of our trade alert services, so you can stop with your neck hurting as we go through these triple digit up, triple digit down, and wander around the desert here. Okay, have a great rest of the day. Happy hunting. Make sure you hedge, and I'll be back with tomorrow's SITREP. We'll see you.